Hello YouTube. I've decided to talk today a little bit about one of Kamala Harris' policies plan on economic taxation presented on her presidential campaign for this election coming up in November. So let's start. How Kamala Harris' tax plan will impact the economy. Let's say if a company makes $100 million pre-tax, it now pays 21 million in tax, so it will make 79 million after tax. With the tax increase from 21% to 28, which is the plan, it will now make $72 million after tax. So 72 divided by 79, it means approximately like 91%. So earnings on that company will go down by 9%. Without market volatility, this means stocks go down by at least 9%. This will affect 401k plans directly, meaning less money in your account. Since this doesn't affect gold or Bitcoin because they offer no earnings, they will appreciate more than stocks. If you want to counter this scenario with, well, this plan is for just wealthy individuals worth more than 100 million, let me explain to you what is next. If capital gains go to 44% from 20% that is now, and a big US investor makes 1.2 times on a company investment, pre-tax, they will now make 11.2% instead of 16 that they were making before. This is 30% less. Foreign investors will pull out of US stocks, and this will force stocks to crash, to come down. If the tax on unrealized gains goes through, the entire startup and the venture capitalist industry will be demolished because they are the first one to invest, meaning they take the bigger risk. Bottom line, because I don't want to keep it too long, stocks will crash, followed by massive unemployment because companies or corporations will not invest in more labor when profit is reduced due to taxation. Foreign investors will pull out of the US markets along with big US investors. The dollar will crash, causing inflation on imports. The deficit will be bigger. We just passed $35 trillion on the deficit, so it will get bigger. Now, about the one so-called taxing unrealized capital gains, meaning when you have a big portfolio of over $100 million, even if you don't sell any assets, you have to pay 25% unrealized capital gains tax per year. So if we do a simple math, let's say a hedge fund manages $200 million in the first year, pays $50 million unrealized capital gains just on the taxes without selling any asset. So next year starts with $100 million on the balance sheet because of the $50 million that it was paid on taxes. In 2 or 3 years, we'll have less than $100 million in managing. We are talking about pension plans, hardworking people savings money. In other words, everything will crash. You have to understand that. This is not doable in American society or in any capitalist society. This is just my opinion based on simple math and economics. You can do it yourself. Think about it. Take it into consideration if you think it's viable or not. With that being said, I wish you a better day tomorrow, and don't let any day pass by without learning something new.